There is a city built on water that should not exist. No farmland. No natural resources. No strategic high ground. Just a collection of islands in a malarial lagoon where refugees fled barbarian invasions in the 5th century. And yet, for 700 years, this impossible place became the richest, most sophisticated financial power on earth. Venice wasn't a kingdom. It was a corporation. The first modern one. A republic where every noble family held shares, where profit was policy, and where the state itself operated as a business enterprise with maritime routes as revenue streams and diplomacy as risk management. This is the story of how fishermen became financiers. How a lagoon became a central bank. How a city with no army conquered trade itself. In the beginning, there was salt. Not gold or silk or spices. Salt. The preservative that kept meat from rotting, the mineral that made food edible before refrigeration. Venice sat at the edge of the Adriatic, where seawater could be evaporated in shallow ponds, crystallizing into white gold. Salt was survival. And survival, monetized, became power. Early Venetian merchants didn't just harvest salt, they controlled its distribution up the Po River Valley into northern Italy. They established monopolies, fixed prices, and eliminated competitors. Not through conquest, but through contracts. Through networks of trust that made Venetian salt more reliable than anyone else's. This was the foundational insight, that commerce is a system, not a transaction. That repeat business beats one-time plunder. That trust, once established, compounds like interest. By the 9th century, Venice had evolved from salt traders to maritime middlemen. Positioned between the Byzantine Empire and Western Europe, between the Islamic caliphates and Christian kingdoms, the Venetians became brokers of everything: grain from Egypt, spices from the Levant, timber from Dalmatia, slaves from the Black Sea. But here's where they diverged from every other merchant city. They didn't just participate in trade. They structured it. Venetian merchants invented the future. Literally. They created the colleganza, an early form of joint stock venture where investors provided capital and traveling merchants provided labor, splitting profits upon return. Risk was distributed. Capital was mobilized. Commerce became scalable. They pioneered marine insurance, recognizing that a single shipwreck could bankrupt a merchant, but spread across 100 investors, it became a manageable cost of doing business. Loss was no longer catastrophe. It was statistical probability. They developed double-entry bookkeeping, assets and liabilities tracked with mathematical precision, turning commerce from an art into a science. Every ducat accounted for. Every voyage measured against projected returns. And they created futures contracts, allowing merchants to lock in prices for goods not yet delivered, stabilizing markets and reducing volatility. Wheat harvested in the future could be sold in the present. Time itself became a tradable commodity. These weren't abstract financial instruments. They were technologies of trust. Mechanisms that allowed strangers to do business across continents, across languages, across religions. The Venetian system made commerce predictable. And predictability made it profitable. But the true genius of Venice wasn't innovation. It was integration. The fusion of commerce and statecraft into a single, self-reinforcing system. Consider the arsenal. Built in the 12th century, it was the first industrial complex in history. A state-owned shipyard capable of assembling a fully rigged galley in a single day using assembly line techniques 5 centuries before Henry Ford. At its peak, the arsenal employed 16,000 workers, carpenters, rope makers, sail stitchers, blacksmiths, all coordinated through standardized processes and interchangeable parts. The arsenal wasn't just economic infrastructure. It was military dominance as manufacturing efficiency. Venice could outbuild any rival, replace losses faster than enemies could inflict them, and project power across the Mediterranean not through superior tactics, but through superior logistics. The state didn't just regulate commerce. It was commerce. Every major trading voyage required Senate approval. Every diplomatic treaty was negotiated by merchant ambassadors who understood that politics and profit were inseparable. The Doge wasn't a monarch. He was a chairman of the board, elected by an impossibly complex system designed to prevent any single family from accumulating autocratic power. Power was distributed. But the system was absolute. Venice ran on information the way modern economies run on data. And they treated information as the ultimate strategic asset. Venetian ambassadors weren't just diplomats. They were intelligence operatives. Every envoy sent detailed reports back to the Senate: economic conditions, political tensions, technological developments, trade opportunities. These dispatches were compiled, cross-referenced, and stored in state archives, creating an institutional memory that spanned generations. The Venetians employed cryptography, using coded ledgers and encrypted correspondence to protect trade secrets and diplomatic communications. They maintained networks of spies across Europe and the Middle East, paying for whispers about wars, harvests, and bankruptcies before markets could react. They understood arbitrage not just in goods, but in knowledge. A merchant who knew about a crop failure in Egypt before anyone in Venice could corner the grain market. A banker who learned of a king's impending default could liquidate positions before the news went public. Information asymmetry was profit. And Venice institutionalized it. At the center of this system was the ducat. First minted in 1284, it became the reserve currency of the Mediterranean world. Pure gold, consistent weight, trusted universally from London to Cairo. Kings debased their currencies. Emperors clipped coins. But the Venetian ducat remained stable for 5 centuries. Not because of gold reserves. Because of reputation. The ducat was backed by Venice's commercial network, its enforcement mechanisms, its legal system, and its track record of honoring contracts. When a merchant accepted a ducat, they weren't just accepting gold. They were accepting Venice's promise that the system would endure. Money is belief made fungible. And Venice made the world believe. Trade flowed because trust flowed. Trust flowed because Venice demonstrated, year after year, that the system worked. That contracts would be enforced. That debts would be repaid. That ships would arrive and return. This was the self-reinforcing loop. Commerce generated wealth, wealth funded infrastructure, infrastructure secured trade routes, secure routes attracted more commerce. Each cycle strengthened the system. Each generation inherited a machine more sophisticated than the one before. Venice wasn't built on conquest. It was built on compounding. But systems optimized for stability become brittle when conditions change. And by the late 15th century, the world was changing faster than Venice could adapt. 1492. Columbus reached the Americas. 1498. Vasco da Gama rounded the Cape of Good Hope, opening a sea route to India that bypassed the Mediterranean entirely. Suddenly, the geography that had made Venice indispensable became irrelevant. The Atlantic became the new center of global trade. Lisbon, Amsterdam, London, cities with access to ocean routes, displaced Mediterranean powers. The Ottomans consolidated control over eastern trade routes, squeezing Venetian margins. And the discovery of American silver flooded European markets, destabilizing currencies and eroding the ducat's dominance. Venice didn't collapse suddenly. It eroded. Slowly. Gracefully. Like a cathedral sinking into the lagoon. The mechanisms that had generated wealth for centuries, monopolies on eastern trade, control of Mediterranean shipping, arbitrage between Christian and Islamic economies, lost their effectiveness. The system that had compounded for generations began to contract. By the 18th century, Venice was a shadow. A tourist attraction. A living museum of Renaissance architecture and Baroque decadence. Sustained not by commerce but by the curiosity of travelers who came to see where the future had once been invented. But here's what Venice proved, and what every financial center since has rediscovered, that commerce isn't just about moving goods. It's about constructing systems. That wealth doesn't flow from resources, but from networks. That power belongs not to those who own the most, but to those who connect the most. Every stock exchange from Wall Street to Hong Kong operates on Venetian principles. Joint stock companies. Risk distribution. Futures markets. Insurance contracts. The separation of ownership and management. The fusion of private capital and public policy. Every global currency from the British pound to the American dollar has attempted to replicate what the ducat achieved, becoming not just a medium of exchange, but a symbol of systemic stability. Every multinational corporation follows the Venetian model: decentralized operations, centralized information, and the strategic use of network effects to create barriers to entry. Venice didn't invent capitalism. But it demonstrated what capitalism could become when pursued with institutional sophistication and transgenerational continuity. When profit wasn't just personal enrichment, but civic infrastructure. When the state didn't regulate markets, it became one. The irony is perfect and complete. The republic that mastered controlled wealth, that turned commerce into statecraft and statecraft into profit, that built the most sophisticated financial system the world had ever seen, eventually drowned in its own success. The lagoon still stands. The palaces remain. Tourists photograph the Bridge of Sighs and ride gondolas through canals where galleys once carried fortunes. The architecture is breathtaking. The history is everywhere. But the system? That moved on. To Amsterdam. To London. To New York. To Shanghai. Because here's the final lesson Venice teaches: no empire is permanent. No monopoly lasts forever. No system, however sophisticated, can survive when the fundamentals shift. Geography changes. Trade routes evolve. Markets move. And the cities that controlled yesterday's networks become museums for tomorrow's tourists. Venice invented the future. Then became the past. But the blueprint remains. Every merchant bank, every trading floor, every financial hub carries Venice's DNA, the understanding that wealth is a system, trust is a currency, and power flows not from force, but from making yourself indispensable. The lagoon may have sunk, but the model floats on.